there is some new research out from the FDIC showing that Black and Hispanic households are still unlikely to have bank accounts. That means they could suffer disproportionately from economic consequences of this pandemic. Brian, you looked into this research. What stood out to you?
Well, it seems like with the advent of especially mobile banking, everyone's got a bank account, but is that necessarily prevalent in all communities? And the FDIC, again, the Federal Deposit Insurance Corporation, releasing a study yesterday saying that as of the 2019 data that they surveyed, over 90 or about 95% of US households did have a bank or credit union account. But when you break that out to Black, Hispanic, and American Indian or Alaskan Native communities, the share of unbanked households is significantly higher, almost 14% for Black households, 12% for Hispanic households, and then a whopping 16% for American Indian communities. Now, we know that these are also the same communities that have been particularly hard hit by the COVID-19 crisis. And although the FDIC survey of household use in banking and financial services did not cover the COVID-19 period, the data was collected as of 2019, we did see that the FDIC warned that this could be a trend that could be alarming for these specific communities, saying that they expect the unbanked rates to go up as a result of this crisis. Now, not having a bank account was enormously consequential during this period of time, when you consider that those households that really needed those stimulus checks, if they didn't have a direct deposit, had to wait weeks, in many cases months, to get either a paper check or a debit card in the mail to be able to use that $1,200 in stimulus money. Now, we know that those people who also don't have bank accounts are also more likely to need that. So definitely a little bit of an alarming statistic from the FDIC.
But did the FDIC look into those who are unbanked having other outlets, whether they be digital or other avenues by which they might be able to accomplish the end result as if they did have bank accounts?
Absolutely. And that is the case with many other types of financial services that aren't traditional banks, because as you mentioned, the definition of unbanked per this survey is just a traditional bank or a credit union. But we have to acknowledge that the FDIC is a banking regulator, so they don't necessarily have as in-depth data when it comes to other types of non-bank financial services. But we have to consider that if a family, for example, is not at a traditional bank or a credit union, it is definitely the case that it could be concerning to use a non-bank financial service if you're thinking about things like payday loan shops or pawn shops. Obviously, they charge very high interest rates, can catch a lot of consumers into unpayable debt traps. So that's definitely something that the FDIC has said that they've tried to pay attention to. But again, as a banking regulator, they did pay attention mostly to just banks and then non-banks.